Then we have Neeraj Akhoury, the Managing Director at Shree Cement, who joins us on the show. Hi, Mr. Akhoury. Good morning and congratulations on a good set of numbers. What's the strategy going to be, sir? Volume growth actually has been lagging the industry, at least in the past year, but pricing has improved and profitability has improved. For this year, what kind of a volume outlook do you have? Point number one. And premium as a percentage of your trade mix, that's moved up. Where is that number headed from around the 15% mark?
Good morning. I think as we always have liked to believe that the cement demand growth would be in line with the GDP. If we are expecting the GDP to grow by 6 to 7%, then to my mind, cement demand growth will also be around that, 6 to 5%, 6 to 7%. Yeah. For us, we would be adding some new capacities this year. We have already added 2 plants this year, and we will be adding 2 more in the coming quarters. And that should give us a volume which will be slightly higher than the industry average, industry growth. That is how I see. On premium, we have been working on it. We've already reached from 9% to roughly about 15.5% now. And this trajectory will continue. We expect it to touch somewhere around 17-18% soon. That is a trajectory that we have decided. The focus is on profitable growth. The focus is how to make sure that our efficiency parameters as well as our pricing works well for our results.
Okay, so high teens is what you're gunning for in terms of premium as a percentage of your trade mix. Got that. And on volumes, we are working with 6-7% growth for the year, a GDP growth that is, 6.5% or thereabouts. So, and normally, as you said, cement grows at a faster clip. So for your company, sir, after underperforming in the last year, this year, fair to assume 9 to 10% volume growth?
No, I would rather keep it at 8% for now.
8%, you're being conservative because I'll hold you at this number as well the next time around you join in. Got that. On the cost side, you have been, focusing a lot out there. And if I look at it, green power, the share is at around 60%. It's the highest in the full industry. And that's moved up. Where do you see this number headed? And since you have cost levels in place, what does it mean in terms of an EBITDA per ton? For the year, you were at around 1,000 rupees or thereabouts. This year, what is the range we can work with?
So it's not right to give me an estimate like but I would say that given that we are having better prices than what we had last year in the same quarter, along with the fact that some of the costs continue to decline, including the fuel prices, we expect that the fuel prices will at least remain at this level and not go up. In that case, I would say that the EBITDA would be in there. Should be better than what we have seen for full year last year at 1,000. But we'll not be able to give an exact number at this moment.
And DAM Capital is saying by FY27, they're expecting the number to go to 1,370. You agree?
Let's see. It's too early in the year. It's just quarter one of the full year. Let's see. Yeah.
And green power is a percentage of the mix. Where does it go?
We are working a lot on the green power, and 60% is what we have achieved. Happy to note that we are one of the best in the industry, most probably globally as well. And I would expect this to go up. We are already working on some more sites across the country, so it should go up in the coming quarters.
Mr. Akhoury, you all will have to do something more exciting now, because I mentioned this to Mr. Bangur as well. Shree Cement always gets the best valuation in the full cement pack, because of the ROC. You all were the first ones to get into petcoke, all that taken on board. But Street is looking for something more exciting. What is that going to be from here on? You're sitting on cash of around 5,400 crores, which is a good amount. You have a capex plan of around 3,000 crores for this year. Some kind of inorganic growth could be the trigger. Are you looking?
Nigel, as I said, we are very intensely focused on being the most profitable cement company in the industry. And that is something that we would like to fiercely protect in the coming quarters and coming years as well. We have a lot of plans on organic growth. We have a plan to reach 80 million tons by FY28. And with that ambition, I think through organic routes, we will reach there. We are not against any inorganic growth. But it should make sense to us in terms of valuation, in terms of strategic fit. But currently, the focus will remain on how to reach 80 million tons on the organic route.
You have, you're currently in that vicinity of around 60 to 63 million tons.
Yes.
And I think what's on the drawing board is to reach 70 million tons. So from 70 to 80 will all be organic. Is that part of the plan as of now?
Yes, absolutely.
And you mentioned a couple of times that profitable growth is something, you want to be the low cost producer and in turn, focus on profitability. But if it's a toss up between profitability and volumes, what you'll choose? Because last year volume growth was very, very low. It was low single digit and you lagged the industry. So a toss up between the two, which one are you selecting, Mr. Khoury?
We are very clear that value is what we should be chasing, and not just volumes. Volumes are important, but at the same time, we would be following that. How can we get more profitable growth and not just volume growth?
Okay, all right. Profitability over volumes. We got that on board. We'll hold you to a few of these numbers. Thanks a lot, Mr. Khoury, for joining in and detailing those set of numbers and the way ahead.
Pleasure.
By the way, when we're having the chat with the managements of Muthoot as well as Shree Cement, the markets are actually down close to under 150 points. Number of stocks advancing still more than the number of stocks declining, though in fact the mid-cap index is almost moved into the red. Slip into a break, come back. Manisha Gupta will be joining in to tell us what's going on in the commodity space.